Hello, everyone, and welcome once more. We are going to do something interesting today, which is watch a clip from a documentary called Inner Reflections by Peter Joseph. In this documentary, they explain how the money system actually works, but I think they missed out a little piece of the puzzle, and I wanted to be more clear about it. So, after saying what I think must be said, let's watch the thing together.
So I'd like to go back to the subject of inequality, but this time to understand the mechanics of the oppression, how the hierarchy was kept in place.
Okay, let's start with money. Money was the infrastructure of the market economy, and how it was created and moved around was instrumental to lower class oppression.
So you had these things called banks, and they had the ungodly power to make abstract value out of nothing. If a person needed money for a home, or car, or business, they went to their local bank and applied for a loan. And if approved, the person signed a contract, binding them to return that loaned money at a future date. Though it's not really a loan in the sense of somebody lending out what they already owned. Contrary to what most assumed, banks didn't loan out money they actually had. They instead created new money in the form of credit, backed by debt.
So, on one side, money represented a store of value people could spend, while on the other, it was a liability made out of debt. In other words, for every dollar that existed, there was also a debt of a dollar owed to some bank somewhere. That was how money was brought into existence, and when someone repaid the loan debt, the money then disappeared.
That understood, any kind of service in that economy sought a profit. And in the case of a loan, that came in the form of a fee called interest. So the borrower not only had to eventually repay the loan, but also the interest charged as well.
Imagine an island of 100 people. They decide to organize themselves through market economy. They plop a bank down and each of them take a loan for 100 credits of money at 10% interest. So they all now have 10,000 credits total in their money supply. And they begin to work in exchange, creating economic activity. When the time comes to pay back the loan, they realize they owe not only the 100 credits, but the 10% interest, so 110 credits. Same for the whole society. In total, everyone on the island now owes the bank 11,000 credits. But yet, only 10,000 actually exists in the money supply. There is now more debt owed than money in existence, due to the interest charged.
So 3 things can happen. 1, those short can take on more loans to temporarily cover the old ones, postponing the problem. 2, people could ramp up competitive trade, increasing economic activity to try to get enough from others to cover the debt, displacing the debt responsibility like a game of musical chairs. Or 3, the bank comes in and takes real property to compensate for the outstanding debt, which is inevitably what happens somewhere down the line anyway.
Wait, that can't be right. That would just be a system of organized theft.
Yes, banks were vehicles of creation on one side, and a system of organized theft and class oppression on the other. But in a large, complex global society, one based on economic growth, money moves so rapidly it was very hard for the mechanics of this to be recognized, obscured by things like the boom and bust cycle, monetary expansion and contraction.
Okay, so that was the video. As you see, it explains very clearly many important things, like how money is created these days, and that we pay interest just for having money, instead of having it created by ourselves without any cost. And the 3 ways by which loans end up being impossible to repay are somehow true. For example, yes, we can increase the amount of loans whenever we are not able to repay, and this makes them grow exponentially, and we pay more and more interest to those that lend the money out of existence in the first place. This is happening, and it's a burden for future generations for sure. The second thing is we compete more between ourselves not to be the ones that are not able to repay. And this is also happening. People are putting lower prices on what they sell, such as labor, for example, or raw materials. The countries that are too much into debt sell their assets for very low prices. This is really what's going on, but the documentary implies that it has to end up in someone not being able to pay their debts. This is where I think they left out something important. Banks don't create money only by lending it. They can also use it for pay for things. For example, if they want to buy an office building, they could do so by creating new money in the account of the seller of the building. Or, for example, they could pay their workers or their stakeholders with newly created money. So that if banks choose to spend money into the economy, newly created money, then yes, it's possible for everyone to earn this new money back and pay the interest on the loans. But the truth is that the key question raised up in the documentary still remains, because yes, banks have a power position in the market because they can choose to spend or not to spend this money into circulation. And they can choose where they do spend this money. If they choose to give it back to stakeholders, then the whole economy ends up inflating the prices of the assets of those that are already rich. So these are some things to take into account. The price system in the market is flawed, is not an objective truth, because the power relations behind that shape the prices. And having a system where banks can create money makes all that the financial system creates, all these assets that can be hoard, financial or housing, for example, become more expensive, more and more expensive, while the rest of us, our labor and the things we can offer become cheaper and cheaper. So it's a way of extracting wealth from the whole economy to this renting sector, which is the financial sector. So I hope you like the video, and by complementing it with this explanation on how banks can also create money, I think it's more clear, it is more precise, and the way in which the system actually works, being the result kind of similar to that posted or to that showed in the documentary. Hope you like it. See you in another video. Have a nice day, everyone. Bye bye.